All right, let's talk about something crucial for any founder trying to raise money. We're going to decode the language that investors actually speak. And I'll give you a hint. It's the language of metrics. We're not talking about some fuzzy, far-off vision here. We're going to show you how to turn your data into a story so compelling, it doesn't just get you a meeting, it actually gets you that check. Let's dive in. Okay, and this right here, this is pretty much the golden rule. Every single number, every chart you put in your deck has exactly one job: build an investor's conviction. That's it. If a number doesn't do that, it's just clutter, it's noise. And using this as your filter, well, that's the secret to a powerful, focused pitch.
So why are we so obsessed with metrics anyway? Well, it's because investors are basically professional pattern matchers. They've seen thousands of companies. They need to see hard evidence that your company fits a pattern of success, a pattern of scalability. And the right metrics, that's the proof they're looking for.
And this is such a critical distinction to make. On one side, you've got these vanity metrics, right? They feel good. We got 1 million page views, 100,000 downloads, but they don't actually prove you have a business. That's the noise. But on the other side, that's the signal. Revenue growth, retention, acquisition cost. This is the stuff that proves you can make money, keep customers, and grow efficiently. This is where you need to live. Okay, so to tell that story well, you can't just throw numbers at a wall. You need a framework. And luckily, investors already have one. I like to call it the 3 buckets of conviction. And once you get this, it's kind of like having a cheat sheet for how they think.
And here they are. It's actually pretty simple. Bucket number 1 is traction and growth. Pretty straightforward. Are you growing? Is that growth compounding? Bucket 2, unit economics and efficiency. Do the numbers work for each customer? Can this thing actually make money when you scale it up? And bucket 3, durability and retention. Once you get a customer, do they stick around? Do they maybe even spend more over time? You see, a killer pitch doesn't just nail one of these. It has a rock-solid story for all 3.
All right, so let's get down to brass tacks. We're going to dive into the actual tools, the specific metrics you'll use to fill those buckets and build that conviction we've been talking about.
Okay, let's start with a big one. Net revenue retention, or NRR. This thing is a beast. Think about it this way. It answers the question, if we stopped signing up new customers tomorrow, what would happen to our revenue? Would it shrink, stay flat, or, and this is where the magic happens, does it actually grow all by itself? This one number proves your product is essential, not just some nice to have.
And here's the number you should be aiming for. This is what great looks like. Now, an NRR over 100% is already fantastic. It means your existing customers are making up for anyone who leaves. But the elite companies, the ones VCs are falling over themselves to fund, they're hitting 120% or even higher. That means their existing customer base is a growth engine in and of itself. That's just a ridiculously powerful signal.
And this chart right here really breaks down why that 120% number is such a game changer. Look, you're always going to have some customers leave, that's churn, and you'll always be trying to get new ones. But that middle bar, expansion, that's your secret weapon. When your expansion revenue from current customers is bigger than the revenue you lose from churn, you've got what's called negative churn. And man, that is a story every single investor wants to hear.
Okay, let's switch gears a bit and talk about efficiency. This right here is the golden ratio. It's all about your unit economics. Your lifetime value, or LTV, needs to be at least 3 times your customer acquisition cost, or CAC. Basically, it means for every single dollar you spend to get a customer, are you making at least $3 back from them in profit? This simple ratio proves your growth engine isn't just fast, it's profitable and sustainable. It's not just about static numbers. It's about showing momentum. And a really great milestone slide does 2 things perfectly. On one side, you're showing what you've already done. You shipped the MVP. You got your first customers. You're proving you're a team that executes. And then on the other side, you're showing them exactly where you're going with their money. This totally de-risks the investment in their eyes because it turns a vague promise into a credible plan.
All right, so we've got our metrics, we've got our milestones. Now for what might be the most important part. How do we weave all of this into a story, a narrative of momentum and efficiency that actually sticks?
Okay, look at this. This is basically your blueprint for a killer traction slide. It has everything. The title tells the whole story in a single headline. The visual makes the trend obvious. And see the callouts? They connect what you did to what happened. We launched new pricing and bam, our payback period got better. That is so crucial. And then at the bottom, the footer has all your key metrics in one place. It's one slide that tells the whole story. Growth, efficiency, durability, it's all there.
And please, remember this.
Look, your job isn't to be a data librarian. It's not to make an investor squint at a chart and figure it out for themselves. You have to be the guide. You have to give them the punchline. For every single chart, you should be able to tell them the one thing, the one key takeaway that they absolutely need to remember from it.
So, to pull this all together, here's your final checklist. Think of it as your playbook. First, pick just 3 to 7 core metrics. Seriously, drop the rest. Lead with your absolute best chart, probably your revenue growth. Prove your business is durable with that retention data we talked about. Annotate your charts to show cause and effect. And the last piece, and this is key, tie your ask, the money you're raising, directly to improving these specific metrics.
So, I'll just leave you with this one question. Because at the end of the day, data is forgettable. The numbers will blur together from all the decks an investor sees. But a great story sticks. So look at your deck, look at your numbers, and ask yourself, are you just showing data, or are you telling a story of inevitable success that an investor would be crazy to ignore?
Thank you.